Payables for the period ending December 31st, 2020 was at rupees 2103 crores as compared to rupees 2167 crores as on September 30th, 2020. The total asset addition was at rupees 138 crores in the third quarter and at rupees 528 crores for the 9-month period ending December 31st, 2020. Of this, the tangible asset addition for the quarter was 83 crores and rupees 285 crores for the 9-month period ending December 31st, 2020. The total R&D for the third quarter was rupees 298 crores, which was 10.7% to net sales for the third quarter. And for the 9-month period, the total R&D was at rupees 917 crores, which was 11.3% to net sales for the 9 months for this period. For Ichnos Sciences, the R&D expenditure for the third quarter was rupees 171 crores, and for the 9-month period, it was 569 crores. Before we open the floor for Q&A, I would like to introduce the members of Glenmark management present for the call. We have Mr. Glenn Saldanha, Chairman and Managing Director, Glenmark Pharmaceuticals, Mr. V.S. Mani, Executive Director and CFO at Glenmark Pharmaceuticals, and Mr. Robert Crockart, Chief Commercial Officer, Glenmark Pharmaceuticals Limited. With that, we would like to open the floor for Q&A. Over to you, moderator.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi, good morning. First question is on Ichnos, whether there is an update on, the possible monetization which we were planning. If you could highlight that.
Sure. So Prakash, we are still working on the capital raise as we speak. In addition, we have several partnering discussions with various companies to partner out some of the Ichnos portfolio. So I think between these two, we feel pretty confident that we will close something in the near future.
So we should expect by end of this fiscal, or it can slip to next fiscal?
I can't give you a definitive timeline, but we will close something pretty quickly.
Okay. It could be molecule-wise or the company level?
Absolutely.
Okay. And secondly, some color on the U.S. markets. So what we understand from other, your peers, that, the volume tailwind and the pricing tailwind which came in the first half of the year is now normalizing. How we see as a company our U.S. business shaping up, given things have already normalized and we have not benefited in the first half because of these two?
So this is Robert. Thank you for the question. I think first of all, if you look at the third quarter, we've had the opportunity to launch quite a few new products. When you're looking at sirolimus, tacrolimus, and we've also had the opportunity of having results for pimecrolimus on a full quarter basis. So we've already seen some momentum gained with these new products. And I think in particularly looking at the current quarter, we've just recently had the opportunity to get approval on topiramate and Clinda, and also amphetamine. So we are quite optimistic with all the new products coming through that we're going to see some good positive gains in the U.S. business going forward. And this should set us up really strongly for the start of the new year.
So is there any guidance to fiscal 22 growth or very rough cut estimate?
Yes, well, I mean, we believe that we should expect growth in the region of around 10%.
That's great. Okay, thank you. All the best.
Thank you.
Thank you. Participants, to ask a question, please press star, then 1. Anyone who wishes to ask questions, please press star, then 1. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, thanks for taking my question. Glenn, on the India business, is Fabiflu still a reasonable contributor to the business in the current base for the quarter, or this is essentially now a non-recurring business, non-COVID business, effectively?
So, Nitin, if you don't mind me jumping in, yeah. I think quarter three we've seen a dramatic drop in Favi, and so everything, the majority of what you've seen has actually come from our base business, and this will continue into this current quarter. So we're still quite optimistic that even with some of the challenges we've had in Respi and Derma, we're even going to see a recovery in that, which should set us again up really well for the closing and the start in the new year.
Okay, that's great. And secondly, on the other non-India, non-US geographies, how are you looking at the next few quarters in these businesses? If you Latin America, ROW, as well as Europe, how should we mentally look at how these businesses scaling up now going forward, given that probably the peak of the pandemic is behind us and those businesses are behind us?
No, you're right, Nitin. You're spot on. I mean, we've really had some challenges with regards to the pandemic. It's impacted us across all of these regions. I mean, even as we speak, several of these markets are still in full lockdown. But however, when we're looking at markets like Middle East and Africa, we've seen some good positive gains in quarter three, and also expecting in quarter four some good results. Asia has been dramatically impacted, right? And I think, as you know, many of those markets are still in full lockdown. And then again, I think when you look at the EU, there's some key markets like Germany, UK, even in the Central Eastern European markets that's still in lockdown. So as we speak, still there's impact. We expect still further impact in this quarter, but we believe, as we all know, that this is going to show strong recovery pretty much probably more from quarter one next year. So we just kind of got to go through this period.
Thanks. And just a couple of questions on the balance sheet. So again, pretty remarkable improvement on the cost side. We've had probably the third or fourth quarter running when we've seen a very QOQ, rather YOY reduction in other expenses. Now, is this where have we sort of pretty much maxed out our cost containment out here, or there's still opportunities to take costs out further in this business, in the cost base?
So good morning, Nitin. So what I would like to guide you to is that we're seeing an EBITDA margin in this quarter at least higher than 20%. But what we would like to guide is that going forward, we're seeing a 19 to 20% EBITDA margin. Okay. So I think in that sense, we'll try and ensure that overall we manage an EBITDA of about 19 to 20%.
And Mani, that is the guidance for what? For FY22, or this is?
Yeah, FY22. Yes.
But if you take a slightly long-term, say 2 to 3 year view, how should one look at the EBITDA trajectory now going forward?
I think going forward also we look at some, we have had a lot of, in a way we've been working very hard to ensure on all fronts, be it improvement in our gross contributions, be it in some of the expenses, but obviously some were very low during the pandemic, so some of them may go up a little bit. But on an overall basis, I look at it that we should track towards these numbers, okay? At least for the foreseeable future, yeah.
Okay. And in the quarter, we had a reasonably sharp increase in gross margin. This is, I think, any particular segment contributed meaningfully, or?
Yeah, no, I'll tell you, not particular segment. I said, just adding to what Robert's commentary was, there are certain markets that have a higher proportion of GCs. Their growth was much better, like India, Russia, etc. Some of these, and some of the new launches also had a better margin. So overall, the mix came to, we have a GC, a gross contribution of about 67%. I would like to guide that we would be somewhere around, historically also we've been between 67 and 65. We should be somewhere in between, closer to 66, yeah.
Okay, thanks. Actually, last one, Mani, on the forex loss that you've had this quarter, this is what, largely translation losses of the subsidiaries?
Yeah, largely translation losses, yeah. You have debtors which get reclassified, yeah, mainly.
And this typically happens when the dollar weakens?
When the dollar appreciates, actually. when the dollar appreciates, your debtors go down, right? Your overseas debtors, whatever are there, they also play a role. Yeah.
Okay. Thank you.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Thank you for taking my question and good morning. Just first one on the Remo plus Vilda, the launch of the FDC, and you indicated the pricing as well, quite aggressive. So just want to understand what is the initial response, and what is also the competitive dynamics. Are there other players who are lining up? If you can help us understand this.
Sorry, I didn't quite get that question clearly.
Robert, let me take it. So I think, Shyam, the Remo Vilda launch is a very strong launch for us. And, our main competitors are, other SGLT2 with DPP4s, which are priced almost 3x, 2 to 3x higher than us. So we see a good opportunity to penetrate this market and to further drive share in this market.
Okay, thanks, Glenn. So just curious, we have been in this market now through different drugs. So just want to understand how large can this entire franchise be if I look at it for Glenmark?
So Remo, we think, can be a 150-200 crore franchise for us in the next 3 years, 2 to 3 years.
Got it. And you're including the FDC, you're saying? Or you're saying?
Including the FDCs.
Okay.
Including the FDCs.
And what are we annualizing now at this point of time?
Probably like 100 odd crores.
Okay. Got it. Good. And the second question is on the API business. Just in terms of the 9-month margin, did I get it right? It's about 29%. I think it's in the MDA. So what is the nature of the products? Seems to be, and the growth in both India and Africa business is pretty high. So from a capacity standpoint, we have seen a lot of the peers increase capacity for API businesses. Just want to understand the general outlook for the API business.
I think API will continue to see strong growth, for the next couple of years at least, right? Given the tailwind that we are seeing because of people shifting from Chinese APIs to Indian APIs, and that is really driving, and also backward integration further into some of these APIs. So we think the next 2-3 years the growth will continue to remain strong in the segment. In terms of capacities, we keep building capacities, adding capacities, and I think that trend we will continue for the next few years to come, because we see a great opportunity to scale this business, and both in APIs as well as CDMOs.
Got it. Thanks, Glenn. Last question is on the capital allocation. Just trying to understand, we've divested certain assets in Russia, and I think you're also talking about Ryaltris launch there. So, and seems to be similar, the respiratory franchise. So just trying to understand what is the need to do the first one, and how does it enable the second one?
Well, I think strategically we divested certain assets, and because of conflicting brands and conflicting areas. So the Russian divestment was purely because we have Ryaltris launching, which is exactly in the same space. So it made sense for us to divest Mometrino Advanced. I think most of our divestments are pretty much done now. As far as Ryaltris, Ryaltris for us is a global brand. So, as Robert mentioned, we have launches in Europe coming up next year, in the US coming up next year, Russia CIS coming up next year, and various other markets. Some on our own, some with partners. So I think it'll be a very exciting brand for us starting FY22.
Got it. Thank you so much again, and all the best.
Thank you. The next question is from the line of Girish Bakhru from Bank of America. Please go ahead.
Yeah, hi. Thanks for taking my question. Actually, just a previous question on Remo. With the launch of dapagliflozin, are you expecting some sort of cannibalization in this market?
Well, clearly there is some slowdown in Remo because of the DAPA launch, but I think given our line extensions, both Remo Vilda, we have one more line extension which is Remo Teneligliptin coming up. I think this is what will differentiate us from some of the other segments, including DAPA.
And Glenn, DAPA Vilda combination will also come. Is that something that you can throw color on?
So far, there is no combination for DAPA. So I think, someone will have to do the clinical trials to launch the combo.
Okay. That's helpful. And on the R&D side, I know you have been kind of controlling that, and there has been some decline in the ICNOS contribution as well. But on the generic side, if you could throw some color, what assets are you focusing on now, and how is the R&D coming down?
I think on the generic R&D, we don't see a decline in spends. It will continue to sustain or grow from here, right? I think ICNOS spends are coming down YOY, but on the generic side, we continue to invest. I think, we have some exciting launches coming up and exciting areas that we're working in, areas like nebulizers, areas like injectables. We have some complex injectables. A lot of our Monroe launches will come up. Next year we'll have 5-6 launches out of the Monroe facility. And then we have some other areas which I can't talk about, which we are investing in terms of growing our franchise, right? Respiratory, of course, as you know, we have a great franchise in Europe, and we continue building a global respiratory franchise in various markets, including the developed markets. So I think these are some of the areas where we continue investing.
Okay, and this last one on the ICNOS side, I know you gave some color on, when we can probably see a capital raise, but has positioning of certain assets become more clear with these discussions that you have been having over the last couple of months? Where do you see, and I know you had mentioned on the update on ISB 1842 and OX40, with, let's say, more clinical assets moving in phase 3 and some in phase 2. Where do you see the positioning is really strong for you?
So I think, look, ICNOS's biggest strength is its platform, right? So we have a platform technology, which is the BEAT platform, right, which can keep churning out bispecific, trispecific antibodies in oncology. And that is the key area ICNOS wants to focus on going forward. We want to partner out our immunology franchise. So clearly 830 and 880 will get partnered out going forward. And the pain asset, 17536. So I think the primary focus over the next few years will be the BEAT technology and the bispecific, trispecifics. Within that, of course, 1342, we are in advanced phase 1B, in the dose range finding. We have 1442, which is pretty advanced and very exciting compound. And there's a bunch of other oncology compounds which we are using the platform, which we are further developing both bispecifics and trispecifics. So I think from an investment perspective, we think it's a great investment because, frankly, the work we're doing is world-class and competes with some of the best technologies globally in oncology.
And is there a potential to take some of these assets to China, even though they are in the clinical stage? I understand many out-licensing deals in China are happening only when the product is in the final stage. But can you take phase 2B assets to China?
So, Girish, I'm not sure about the specific Chinese strategy per se, right? It's possible to take early stage assets. If you see 1302, we had done a deal with a Chinese company, Harbor Biomed. So we have partnered in China also. But I can't give you any specifics on what is the product strategy for China.
All right. Thank you. These are my questions. Thank you.
Thank you. The next question is from the line of Sayan Mukherjee from Nomura. Please go ahead.
Hi, good morning. Glenn, you mentioned on Iconos a capital raise or a partnering pretty quickly. So I'm just trying to understand like what's the timeline here you're looking at. Do you have an offer in hand already based on the discussions on capital raise that you had? And when you're talking about partnering, is it about the platform that you mentioned or specific products? So I just want to understand what's your expectation on cash flows from all that you expect to happen at Iconos over the next whatever time frame you are indicating.
So I think the way to think about it, China, is next year we'll definitely have cash flows coming out of Iconos, right? Either through partnering or through a capital raise, FY22. That's the maximum visibility I can give you. On partnering, we have several discussions ongoing, right, as we speak. And likewise on the capital raise, we have several ongoing discussions. I can't give you anything more definitive in terms of timeline, how quickly we can conclude some of these.
And I mean, if you have a partnering discussion, does it make sense for you to do capital raise after you partner out an asset where some value gets created? Or you think even a capital raise can happen before partnership?
I think the two are mutually exclusive processes, okay? So, we will continue down both the paths and we can run both in parallel.
But do you have a quantum in mind, Glenn, as to, how much of monetization you're looking at? Or, even when you're doing these discussions for capital raise, is there a valuation that you have in mind? And is there a big gap between what you expect and what is being offered? Can you just throw some light here? Because this process is going on for some time now.
So the process has been going on for the last 3 or 4 months, Shayan, right? So I don't think that's a long time. We have some idea on both these topics, right, on valuations and various things that we're looking at. But I can't give you any visibility right now.
Okay. And just, Mani sir, one question on the cash flows. See, if I look at, your debt reduction for the 9 months is just 117 crore. And this year has been a very good year in terms of, the FabiFlu opportunity and the cost initiatives that you have talked about. So with 1,600 crores of EBITDA generated over the 9 months, you had two reasonably large transactions, VWash and Dr. Reddy's. And based on the public information, this would have generated at least 400 crores. So we had 2,000 crore. So even if I take out interest, taxes, there's not much of working capital and capex. It should have generated a lot more, or should have led to a lot more reduction in net debt. So we haven't seen that. So can you just take us through the cash flow statements for 9 months, please?
Yeah, absolutely, Sayan. We had about we have reported EBITDA about 1,600 crores. We had cash interest of about almost 210 or 11 crores, and then we have a cash tax of 335. Also, there were some increases in the working capital because of basically our some increase in inventory and debtors. So it's about 300 plus crores. We had an asset addition for the 9 months of almost 530 crores. We paid dividend out in this quarter. And also there were expenses and inventories that went along with some of these assets. So on a net basis, yes, there is a reduction, but I think going forward in the next quarter, you would definitely see an improvement in our cash flow. So I think I can guide you to saying that at the end of the year, we should have about a 200 to 300 crore reduction in the net debt. Yeah.
But what is your cash inflow from the VWash and the brands that you sold in Russia to Dr. Reddy's?
Yeah, those were not, at least one of the transaction was not even there, so we couldn't say about that. So I can't separately say that to you.
Sorry, sir. You said this Russia...
I said definitely these transactions are not reported. And I mean, as per partnering, we are not supposed to mention these, so I have not mentioned that.
No, but Mani sir, these numbers are large, right? I mean, you had...
but I have baked in all these numbers, Sayan, and have obviously use that money for some of the expenses, there were people along with some of these transactions. A multiple number of things have happened. So net of that, I have reported around standalone 70 crores plus net income. So all that is there, sir. It's baked into it.
Okay. And so last question, if I can, just on these divestment strategies that you have. So you were saying that we are done with most of the disinvestments.
Yeah. Sayan, we are done with all the divestments, and I don't think there's going to be anything anymore. Okay? And even whatever we spoke of, somewhere strategic in nature, so we don't have anything anymore.
Okay. Okay, I'm done.
Thank you.
Participants, to ask a question, please press star, then 1. The next question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Yeah, thank you for taking my question. Glenn, on Econos, is the partnering or fundraise based on any outcome or any data readout for our molecules?
So obviously, Neha, the valuation will be linked to the data readout at least of 1342, right, which should come up near term. So, it's not, the fundraise is not dependent on that, but obviously the valuation will change if you get 1342 data. Right.
So what I mean is, the 1342 data which is going to come out, let's say if we don't have a successful readout, does that delay, the entire fundraise?
No, we don't think so, because there are multiple assets near in Iconos, right, which will drive the success of both the fundraise and partnering.
Okay, so irrespective of the readout, we expect some monetization to happen in Econos. Is that the right way to look at it?
Correct.
Okay. And in a case of Ryaltris in the US, I know you mentioned that it is, under review with the US FDA, but could you give us a little more color as to where it is? And when you mentioned this is an FY22 launch, will this be back-end weighted or, any color there would be helpful?
Yeah, I'll take this. So yes, it is indeed under review, and our expectation is actually in the second half of next year. We'll be working through our partner Hikma.
And just to be clear, on approval, we do have milestone linked with the Ryaltris, right? Or is it only on launch of the product?
That's correct. So we have milestones even on approval now.
Okay. Thank you so much.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Yeah, thank you and good morning, everyone. First of all, Jason, thanks a lot for all your help all these years, and welcome, Ravi. I got 2 or 3 questions. Glenn, what's the expectation for Xolair? When do you think you can? I know you're looking for a partner, but when do you think you can complete phase 3 and the file would be ready for submission?
So, Sameer, we will not move Xolair on our own. We are currently in discussions with partners to take it forward. So until we close a partnership, we will not invest in the phase 3.
Fair enough, Glenn. So, assuming it takes 6 to 9 months to get a partner and about 2 years for phase 3, are you looking at 2.5 years or plus for Xolair filing? Is that a reasonable timeline?
I think that's fair.
Okay, great. And second question is on topiramate extended release. Do you expect competition anytime in the foreseeable future?
We don't think there'll be a competitor anytime soon.
Okay, excellent. And finally on Iconos, again, I know enough has been talked on this call, but just one final, I think we were quite optimistic that we will get the deal done end of 2020. So the question here is, what is the key, bottleneck to get this deal done? Is it the meeting of minds on valuations or something else? If you could just share your thoughts.
So, Sameer, I can't give too much visibility, right? Other than the fact that, look, the capital raise will get done. It's only a matter of time. and the partnering will get done, right? And we are saying, in FY22 you will see some color on either of these activities or maybe both, right? That's the only visibility I can give you.
Okay. Okay, that's fine. Yeah. Thank you so much.
Thanks.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, good morning. Thank you for the opportunity. So my question is on the US business. So can you provide us update on the pricing situation in your derma as well as non-derma portfolio at present, and how do you see going it forward?
So the current situation on the pricing is we see it pretty much normalizing, right? And it's operating probably at a year-on-year single-digit erosion of around 4 to 5%. And however, I think as you've heard, there's quite a few new approvals that are coming through, and we are quite optimistic in terms of this compensating that erosion. So that's pretty much the current status. Yeah.
Okay, this 4 to 5 year-on-year price erosion is for the entire portfolio, right? So I was asking for a bit more clarity, like derma was a bit of a drag for us. So any improvement there?
No, it's honestly it's pretty much in that range. It is the biggest part of our portfolio as well. Part of our bigger portfolio, so it has pretty much that average as well.
Sure. And my second question is on progress on the Monroe supplies. Like, how has been the progress there at present, and what percentage of Monroe costs are right now reflected in P&L?
Yeah, as of now, the Monroe cost, basically the OSDs are reflected into the cost. I mean, largely the injectables and the nebulizers will start somewhere later in this year or next year.
And supplies, yeah, go ahead.
No, I was just clarifying on the cost. So around 50% cost on the OSD side are in P&L, and nebulizers and other opportunities will.
Yeah,
okay.
Yeah. Out of the total cost, maybe about OSD is fully baked in. Yeah.
And on supplies update?
So supplies, we have 2-3 products which we are selling in the market now out of Monroe. But next year, you'll see the full impact of Monroe in terms of supplies. FY22.
Okay, and my last question is on clarity on the debt reduction part. So, Manish sir, did you mention for this year we are looking for 200 to 300 crore of debt reduction, or it's for next year?
No, that is for the current year. Next year could be higher, okay?
It could be higher in next year?
Yeah, sure.
Okay, that's all from my side. Thank you for your answers.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal. Please go ahead.
Thanks for the opportunity. So just a clarification on other expenses, given that, the competition is coming back on the domestic formulation side, and we'll be having ongoing R&D spend. So, let's say in 3Q FY20, we had the other expenses to the tune of 460 crores, and now we are at 400 crores. So how much of it can sustain and how much can come back because of the competition?
I think you're looking at the standalone. Better would be to look at the consolidated. I mean, when you look at that's across all markets. So it's a little lower than last year, but I think even if it picks up a little bit, we are prepared for that. Yeah.
So even considering the other expenses moving up, we should be able to maintain 19 to 20%.
We should be able to maintain 19 to 20%. We are confident of that.
Okay, sir. Thank you.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Vikas Sharda from NTSF. Please go ahead.
Yeah, hi. Just wanted to clarify on the other revenues part. I mean, this quarter is down sharply. I guess part of it is because of forex gains turning into losses, but now the export incentives are also reduced for the sector. So how much of the impact are you having from this export incentives, and how would that impact your margins going forward?
See the export in, if you recollect, the government had withdrawn the MEIS scheme from September till December, okay? So that would have been about 20 plus crores, okay? And obviously the government has come up with a new scheme called RODTP, so that would be, I would assume, at least half or a little more than that. So really difficult to say how it will impact my margins going forward. We'll have to see. They get to announce some rates, etc. for RODTP. For the current quarter, it was at least 20 crores lesser, okay?
Got it.
On the MEI scheme, the duty drawbacks continue, okay? So there are a couple of schemes the government gives the exporter. So only MEIS is what they have withdrawn. The duty drawback still continues. Okay. Thank you.
But overall, then you mean that under the RODPT, you could have like 40 crore less on a full year basis for next year?
Maybe 40, 30, I don't know. I don't have the scheme or the rates coming out as yet. I think people are awaiting that, yeah. So probably by the next call we can give a better visibility on that.
All right. Thank you.
Thank you. The next question is from the line of Harith Ahmed from Spark Capital. Please go ahead.
Good morning. Thanks for the opportunity. Firstly, on ISB 830 and your out-licensing efforts there. So we had initiated our out-licensing efforts for this asset a couple of years back as well. So my question is, how far are we in our discussions this time around, especially given some of the secondary endpoints weren't met in our trials, and the space, the atopic dermatitis space has become much more competitive than a couple of years back. So how confident are we of closing a deal on this asset?
I can't give you a specific on this asset, but I think across the portfolio, we are pretty confident we'll have, you'll see some deal flows, right, on one or more asset across the board.
Okay. And, a follow-up to your comments on the Beat platform. So is it a correct assumption to make that the platform is a bigger value driver for Ichnos than the individual assets there? Because when we look at most of the assets, they're in early stages, either in phase 1 or early phase 2. So any takeaways from your discussions with potential investors regarding what is the bigger value driver there?
The platform is clearly the value driver, right, for Ichnos, right? It's not any individual asset. It's the ability to keep generating, multiple assets out of the same platform, which is the driver for the biggest value driver for Ichnos.
Okay, got it. Thanks for the answers.
Thanks.
Thank you. To ask a question, please press star, then 1. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks for the question again. Glenn, on on our capex, I think a good chunk of our capex is still coming from the intangible additions. I presume a lot of it is for the Europe in licensing that we keep doing. Now, as a business, Europe is now a reasonably sized business. How long does this thing go on in terms of our imperative to keep spending money on buying these assets?
So Nitin, if you see, the intangible addition has come down substantially in this quarter, and I think going forward it will keep coming down. So we have actually taken a pause, right, on the in-licensing. We've done a number of good deals, right? So we have Tio, DPI, we have multiple good product launches coming up through in-licensing in FY22. But I think the capex intensity, the intangible capex intensity will come down from here on.
Okay. If I just follow up on that, Manisha, where should we see our capex now, say FY22? What kind of a broad number will you guide us to?
About 600 to 650.
Okay, which is probably the lowest you've done in a while.
Yeah, absolutely. And current year also is much lower than last year. Yeah.
And this is where you should sort of sustain now going forward?
Yeah, I think so. Yeah. I think so. Around these levels. Yeah.
Okay. And secondly, on the cash tax rates, we're still having a fairly high cash tax rate. What is your perspective on how this changes sort of going forward, or how this sort of moves going forward?
So So, whatever you see as tax going forward, not all of it you will see as cash tax because we'll start using our MAT credit also. So, in a way, if you look at my overall tax, most of it is paid at the standalone level, okay? There the tax rates are lower. So, obviously, on an overall basis, if you look at it as I go along, my MAT will be used. So, I see it around, maybe max around 30, 31, not more than that, yeah.
That is the cash tax rate?
Yeah. You don't pay in MAT, right? Whatever MAT credit you have, you use it going forward, okay? Next 3-4 years.
And how will the ETR look like then against a 31% tax rate?
It will be around these levels, not more than that. Maybe 1 or 2% up and down. That's what I see. I don't see it. At least for the next 1 to 2 years. Then we'll see how things come out. Because as you be aware, government has withdrawn some of the benefits on R&D, etc., etc. So all companies are seeing it go up.
But we don't have an option to go into the lower tax rate of 25% or thereabouts.
No, I have MAT, right? I'll use up my MAT first because I don't pay cash, right? I'll use up my MAT first, then I'll go to the lower tax rate, yeah.
Okay. And so is it fair to say that larger cash tax rate are because of the R&D spends which are there, or because of which the overall...
Yeah, it looks a little higher because of the R&D spends we have outside. Otherwise, on a standalone basis, if you look at it, it is hardly 21%.
Got it. And lastly, on the interest costs, how should that sort of trend going forward?
In this quarter, we did about 95, out of which 15 was actually I made a prepayment of these senior notes. So broadly, around 80 crore is where I see it, yeah. 80-85 crores.
Okay, thank you.
Thank you. Ladies and gentlemen, we take the last question from the line of Krish Mehta from Enam Holdings. Please go ahead.
Yeah, hi. Thank you for taking my question. So I just wanted to confirm more about Ichnos. I just wanted to know the Q4 will not see any licensing deals for any of the assets in the portfolio, right?
No, that's not what I said, Krish. We could have deals coming even earlier. I said we've given ourselves till FY22 to get both the capital raise and partnerships done.
Okay, so we could potentially see something in Q4 as well.
There's always a possibility.
Okay, thank you so much.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to Mr. Ravi Agarwal for closing comments.
Yeah, thank you, moderator. I will just read the disclaimer before we end. The information, statement and analysis made during this call describing company's objectives, projections and estimates are forward-looking statements and progressive within the meaning of applicable security laws and regulations. The analysis contained herein is based on numerous assumptions. Actual results may vary from those expressed or implied depending upon economic conditions, government policies and other incidental factors. No representations of warranties, either expressed or implied, is provided in relation to this presentation. This presentation should be regarded by recipients as a substitute for the exercise of their own judgment. With this, we end Glenmark's Q3 earnings call.
Yeah, this is Mani here. There is an investor relations update. We would like to inform you that Jason D'Souza would be leaving the organization and Ravi Agarwal would now take charge of the investor relations function. We would like to thank Jason for his long-standing services to the company. Thank you.
Thank you, everyone.
Thank you very much, sir. Ladies and gentlemen, on behalf of Glenmark Pharmaceuticals Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.